Two growth stocks trading at 52-week lows. SOFI stock, SOFI Technologies Inc. and PLTR stock, Palantir Technologies Inc. So we all know very well that the growth and technology stocks have been retreating as the Federal Reserve's change in policy has set up expectations for a significant rise in interest rates. A rise in interest rates is expected to drive investors to value stocks and away from growth stocks like SOFI stock and PLTR stock. So would that be the case this time around? That's a question we really can't say, because what we have seen for sure is that what happened in the past is not exactly what always happens now. So the way people made money in stocks in 2002 wasn't exactly the way it turned out. Many people tried to continue to pursue those strategies in 2021 and didn't really work out that way. So it tried to conclude that this will be the lot of SOFI and PLTR, and indeed all the growth and technology stocks would not do well because of the current stance of the Federal Reserve. It's not exactly conclusive, but what we know for sure is that these two stocks are now close to their 52-week lows, or in the 52-week lows. You can see that 13.78. That's the closing price of SOFI, and just probably, if not even probably, it is probably at the 52-week low, or okay, maybe not 50. It's 52-week low, slightly above that 52-week low, but Palantir is definitely there. You can see that price triggered a new 52-week low event of 16.74, exactly where it closed in that session. So the two of them right now are currently, obviously, they trade in the pre and post market right now. So SOFI stock is up $0.94, whereas let's see what PLTR is doing right now. It is up exactly 0.9 as well. So what we know for sure is that since its IPO, this is a SOFI, since its IPO, the highest it has reached is at $2.93 or so thereabout. Since that time, that was sometime in June. Since after that peak, it retraced, fell below all of its moving averages, and continue to extend again, but reach a resistance, met a resistance of $23.24. Since that time, it's been retracing. Even though at various times it tried to challenge its 10-day moving average. This is the daily chart, but it didn't succeed. So it was actually of late, just at the end of the year, that it managed to break the resistance of those two of the 10 and 20-day moving averages and closed at 15.92. But since that time, we know what has happened. Of late, it has now fallen into its 52-week low. So what we can see here is that the readout is saying that it appears to be rallying within a longer-term bearish trend, driving its MACD above the signal line. However, the shares remain below a declining 200-day moving average. Is it the case? Is it rallying right now? We're not seeing anything. It's not really rallying. This is. I don't think we should really rely on that. What we see is a stock that is bearish, just like its moving averages. The underlying trend is a bearish one as well. It's retracing pretty much along the same lines with its moving averages, and the underlying one. Momentum is also bearish as well and retracing. Accumulation is not there at all. This is just based on its daily chart. So moving on to PLTR, we can see what's going on here. Evidently in its 52-week low, we can see that here, 16.74. That's its 52-week low. The last time it actually traded above any of those moving averages was sometime in early November. And it was that was actually after some retracement. It seemed that the end of this huge retracement that occurred also early in October had come to an end. So we're now seeing higher lows. You can see that higher lows, they're all plotting out, but yet met that resistance at 26.78 and began to fall. At the same time, at various times, just like in the case of SOFI, tried to breach the resistance from its 10-day moving average, but never succeeded. So it's the both of them are, they're all retracing alongside their moving averages. Momentum is also waning as well in this case. Accumulation, same thing as well. So the stock appears to be in a strong bearish trend. The shares are below a declining 200-day moving average, and the MACD is beneath its signal line, so it's lagging the S&P 500. Momentum is strongly bearish. The 14 period slow stochastic oscillator is below 20, the level which many analysts call over. So this means that investors have been actively selling shares and driving the price lower. The unbalanced volume indicator is bearish. The slope of indicator is negative and suggests that there is a lack of buying interest. So is this a buying opportunity? Well, you have to be really cautious. There is definitely, because of the fact that the two of them, these two stocks have been retracing. Yes, there is definitely some opportunity there, but I would strictly recommend that if you want to get involved in any of these two stocks, you have to be in it for a very short time. Get in there and take what you have to take, what you make, and get out. If you get in, if it's not working, get out. Don't stay there unless you really believe in their fundamentals. Yes, the fundamentals, they sound good. They've been doing well, so fundamentally, but technically they are not very bright at all at the moment. So obviously, yes, whatever the case is, there's still money to be made. But if you are really keen on making money in the short term, I really don't think, if you really want to make a ton of money in a very short time, I don't really think these guys will deliver the sort of money you're looking at, in a very short time. The huge amount of gains you're looking at. So there will always be money to be made from, these two stocks. But I cannot say that it will be the huge gains. The technicals are not so very bright right now. So if you want to get in, if you want to get involved and see what you can make out of it, and get out and keep watching. If you want to get involved for the long term, by all means do so. In the long run, they will do well, but in a very short time, the technicals don't look right as well. And also, what other experts have been pointing out is that these two stocks, especially SOFI and PLTR, they have not been around for long enough. So it's not exactly easy to determine or predict the sort of things they can do. So the risk is always there as well. So I could be totally wrong about these two stocks. You could get involved and make the huge tons of money as well, but just be really careful with them. And thank you very much for watching this video.